Russia's fertilizer exports have escaped U.S. sanctions for now. But could that change, and what would it mean for global markets? At the same time, Tampa ammonia prices are climbing again, while India's latest urea tender fell short of expectations, suggesting buyers may soon be back in the market. And although lower DAP prices from India have offered some short-term relief, the question is, how long will that calm really last? I'm Johanna Botta, and joining us to break it all down is Josh Linville, VP of Fertilizer at StoneX. Welcome, Josh.
Yeah, hello again.
So let's start with the latest out of Washington. After failed talks with Putin, the U.S. has decided to sanction two of Russia's biggest oil companies. Do you think that Washington can keep fertilizers off the sanctions lists for much longer?
I think a lot of that's going to depend on what Putin and his war machine decides as far as Ukraine goes. We've been talking about this for how many weeks now about how one of my worst case scenario, one of my worst fears is we wake up one morning and the U.S. decided we're going to sanction Russian fertilizer. We went to bed that night and the Treasury Secretary of the U.S. said there's sanctions coming. And that was not a great way to hit the sack that evening. Woke up the next morning, like you said, to the news. It just included oil. So we did dodge a bullet, but people need to remember fertilizer is typically included in that energy bucket. So it's not very far behind. If the war continues and frustration continues in DC, I very much think we could see that start to jump in and become a part of it. And listen, it's going to depend on the product. There's three products I'm really worried about. It's urea, potash, and then UAN. Urea and potash, well, for urea, Russia's our single biggest supplier. If we lose them, there's going to be a short-term pop. There should be a short-term pop in the marketplace in the U.S., North America, but I think we'll find new trade flows relatively quickly. Things will heal. Potash, same way. They're our second biggest supplier, but they're just under 10% of our overall imports. I think we can manage that. UAN is where we really need to watch out because if we lose Russian exports, not only do we lose half of our imports of UAN, Russia loses access to its biggest remaining demand point. And there's not a lot of other players out there that haven't already shut off Russia. So all of a sudden now you have to start wondering, does Russia shut down even more UAN production? Not only does it slash our imports by half, the world could lose another million ton. That's a global S&D driver that pushes prices higher.
So if fertilizers were to be targeted next, what kind of ripple effects would you expect to see first? Prices, supply, or farmers in the U.S.?
I think at first it's going to be a pricing situation. I think in the US, you will see prices pop up very, very quickly because there's a lot of angst, there's a lot of worry, there's a lot of uncertainty. Where's this product going to come from? Oh my gosh, did you know we lost that biggest supplier? A lot of nervousness. It's a lot of emotion driving that market. And from a global standpoint, whoever is the recipient of those Russian tons that we push out of our marketplace, they will actually do fairly well because now all of a sudden Russia's in a position where I need to move these tons. Who's willing to take these off my hands? So they will be the winner. But as time goes by and we, like I said, we start getting these new trade flows, things will start to settle down. We start to find a new normal. It could mean that overall our prices are a little bit higher because we shoved out one of our most efficient trade routes, if you will, but finding it from somewhere else. That's the good thing about urea. We can find it from other places. It's produced all around the world. Now, potash, again, we've got Canada to the north. We've got some relationships with countries like Israel. We can get that product if I'm going to replace it. UAN is still the one that worries me. We're already in a bad supply situation from a U.S. Canadian standpoint. If we lose Russia, the fight with European farmers for those same UAN tons heightens.
Hmm. So let's talk about ammonia now then. The price for Tampa NH3 has gone up by $60, now reaching $650 per ton for November contracts. This is the highest that it's been since February 23. How significant is this latest move?
It's big, but it's expected. Again, when you look through the global anhydrous marketplace, there's a lot of problems with anhydrous. You've got Russia, who's normally the world's biggest supplier, and it's not even a close second. They normally export 4.4 million ton. Well, they relied on that pipeline that ran through Ukraine to load that product into vessels and out to sea. You don't get to use a pipeline that goes to the country you are actively invading. So they've fallen off the face of the earth. Iran and Egypt has had multiple production problems of the year. Trinidad continues to keep having problems. There's a lot of major problems around the world from production that's keeping supply very, very tight. And we know how manufacturers operate. When the S&D is very tight, they're going to try and push prices higher. They're going to try and drive those margins up to offset that high price.
Let's talk about India's latest tender now. I feel like we're always talking about India's tender. RCF, which is one of India's state-owned fertilizer importers, had been targeting to buy 2 million tons of urea, which technically would have satisfied their needs for 2025. What actually happened in this tender, and what does that tell us about where urea prices could go next?
It's interesting. So they targeted 2 million ton. They had about 3.6 million ton offered to them. And in the end, they only purchased about 430,000 tons, with most of those tons being West Coast. And the problem that popped up is that on the East Coast, the lowest price, and that's the price that every other offer has to drop down to participate, was about $15 a ton lower than that lowest price. And then when you look at the top, I'm sorry, within $20 a ton of all the stuff offered, there wasn't very much. And so the market was basically saying, I will not participate at this price. And I think that's very, very important to note. In this situation, in this particular tender, it's not a problem of finding supply. People will readily tell you, yeah, the supply is out there. They could find 2 million ton. It's that the market did not want to sell them at the lowest prices that were offered. The market is pushing back and saying, no, 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 no. This is far too low. So they only purchased 430,000 ton. Now all of a sudden the prices have been jumping up since those offers have been turned in, anticipating another tender. But this is where it gets interesting. We think they're going to come out for another tender relatively soon for 1.5 million ton. And the market is basically saying if the prices stay where they're at, which has jumped up, I would say probably $20 a ton, they'll get the tons they need. So from that standpoint, I still see a global supply from urea that's improved from a year ago, but our values are up significantly. And if India comes in, all of a sudden they get everything they need. The question following India is where do you go? Who's the natural buyer? Things could get slow again.
And one last thing while we're still in India, they've just bought 30,000 tons of DAP from Russia at $725 a ton, down from 810. What does that signal for phosphate prices? And is this a temporary dip or signs of a softer market ahead?
I think it's a little bit more of a temporary dip. And I don't know that we're going to get substantially higher than 810 again for India. The world really pushed back. And when you look at where grain prices are, it simply didn't make sense. It was far too high priced. But the reason why it's dipped is the two things we've been talking about for months now. If we can get Chinese exports to return and we get India to slow down their buying patterns, things will calm down. And that's exactly what has happened. The problem is on the good side, we still think that India is doing okay from a supply situation. They're not desperate. They're not a needy buyer out there. So they're no longer reeking of desperation, which the market's going to take advantage of. But on the supply side, October 15th has come and gone from China, and there was no word of an export extension that's going to happen there. So while we have seen exports pick up July, August, September, we think we'll continue to see them for October, maybe a little bit in November, but those are going to start to disappear as we move into those winter months, into the spring months. And now all of a sudden the global market's going to be looking around and saying, oh, once again, we've lost our biggest supplier. What does this mean? You typically see prices hold steady to push higher from that point on.
Josh, thank you again. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.